product is based on today's market conditions. Now, I've been around a few market cycles. I started out in the industry in the late 90s, gone through the early 2000s and the Great Recession, and also the last kind of decade with the ups and downs. And today we kind of have another cycle here. And how do we take advantage of these cycles? And how do we take advantage of the opportunities that come during these cycles? And right now, there tends to be, and I'm going to get to here the graph, a great opportunity to get discounted real estate. So we as an organization are going out there and buying multifamily assets for 50 to 70 cents on the dollar. And one of the ways that we're able to do this is through just kind of being in the industry over several decades and having those relationships built at the end of the day. And so out of this, we kind of started thinking, hey, what kind of product can we offer retail investors to get involved with that? And came up with this income product. There's about a good anywhere from a 12, 18, 24-month window to buy distressed assets. Right now, as I go through the presentation here, is, let me get the screen going here. Look at kind of the supply and demand over here of the cycles right now is that there is a very, very, very high amount of multifamily on the market today, a lot of units available. And at the same time, there is also a very low amount of new permits. And what I mean by new permits is permits are pulled to build out new units. So in about 18 months, you're going to see these units get absorbed because people need a place to live, and there's no units being put on the market. So that's kind of when the prices are going to go up. And at the same time, we all know that interest rates are relatively higher than they used to be back 2-3 years ago. There's not that much liquidity in the markets, and banks really aren't lending that much. So banks are lending at these depressed values. They'll be lending from 50 to 60% of today's fair market value. And as these prices go up over time, they usually kind of their loan sizes go up. Doesn't make sense. They're like, prices are depressed, they're at 50 to 60%. When prices go up, they'll be at 70, 80%. We'll have this cycle will play itself. So there is a cycle opportunity for people who are liquid today, and we have kind of different, I'll go into details of what that looks like for you